Welcome to The Core, where we're planting the seeds to financial success. I'm Colten Hibbs, your host and Education Credit Union's Financial Health Coordinator, and I'm thrilled to have you join us today. In each episode of The Core, we're here to explore topics designed to help you grow your financial knowledge and help you achieve your goals. I'm excited to welcome Janie Williams to this podcast. Janie is the Assistant Branch Manager of our Badger Smart branch over at Amarillo College with more than 9 years of knowledge and experience, and she's bringing that to today's discussion. So here's a little bit more about Janie. She's driven to provide superior member service and financial wellness to the community as one of Education Credit Union's certified financial coaches. And I'm just so thrilled to have you here with us today, Janie. Thank you.
Thank you so much, Colten. I'm happy to be here.
Yes, let's dive on in, because Amarillo College, I know you see a lot of foot traffic from that college campus, from that college group of kids, or students rather. They're not kids anymore, they're in college.
Absolutely.
So for those young people just starting to manage their finances, what are some smart ways to use a personal or an installment loan to help build credit?
For Education Credit Union, we do have a product called a share secured loan. That product, which you would have to bring in your own money to secure it. I always say bring in at least $500 to $1,000, what you can afford. It'll give you a small payment that you'll pay back, and it will create a credit score for you. There is some financials that they have a product that is a credit builder loan, which is ideal for some that's starting out as well, because what that loan does is you can pay that loan off and then you'll be able to receive that money back at the end. And it'll be a small payment as well. So those are a couple of things. If they don't offer those, you could also get a small personal loan, which I always say $500 to $1,000 is a good start for anybody starting out.
Yes.
Because that's going to set you up for a small payment. You would have 6 months to 24 months to pay back, so a short term. And the main thing for that, for anybody starting out, is to make sure you make your payments on time.
1,000%. That's the largest portion.
That's the largest portion.
Yeah.
It makes up 35% of your credit profile.
Yes.
It's on time payment.
Absolutely. And again, with that, the risk is lower with something like a secured loan, where your interest rate is generally going to be lower for that product.
Yes.
And again, it's going to be secure on our end. You brought the money, so you're less of a risk to us. And if you do make a mistake, it's going to hurt a little bit less than if you have like a car issue or something huge.
Absolutely.
So I love that. That's perfect.
Yes.
Now, what are some common pitfalls to avoid when you're taking out a loan? How can borrowers ensure they stay on track with those on-time payments? But what are some other things that they need to look out for as well?
The rule of thumb is to stay away from payday loans. They typically have higher interest rates. Can become very detrimental because the way their payment plans are set up, you could have weekly to biweekly payments, and that may not correspond with your monthly bills. So that's a big pitfall. You also want to avoid from getting multiple loans at one time, because that could create a space where you have too many accounts at one time, too many inquiries, and that could look like it to a lender when they go to look at your credit. That could look like you have escalation of debt because you took too many accounts out at one time.
And I love that. I love that official term that we use, escalation of debt.
Escalation.
But really, though, if you think about it like in your group of friends, if you have that friend who's always asking, hey, you got $20? Hey, you got $10? Hey, you got $5?
Yes.
Do you want to hang out more or less with that person, Janie?
Less.
There it is.
Let's be honest.
We're the same. And so we want to see what you're doing. Are you applying for loans that you need? What are you using it for?
Stay away from unnecessary expenses.
And I love that you brought up payday lenders. Their systems work slightly differently than most financial institutions as well. And payday lenders truly aren't legal in all 50 states. And so they're legal here in Texas, which is why we encourage people to look out for them. But most of the time, they're going to advertise things like, we don't care about your credit score. And one of those things that a credit score does for you is determine your interest rate. And so whenever people don't care about your credit score, what does that tell us that they're going to do with our interest rate, right?
Yeah, it's going to be extremely high.
It's going to be crazy. So now, can you explain, you mentioned installment loans earlier. So can you explain how installment loans differ from credit cards in terms of interest rates and repayment, and why someone might choose one over the other?
Installment loans, you would have like a set payment, a set term, and you would know ideally when your loan would pay off.
Perfect.
versus a credit card is revolving, so it never closes. So you don't have an actual payoff date.
Yeah, you can run it up, run it down, and depending on how much you've run up in what period of time determines your minimum payment.
That's right.
Exactly.
And some may choose an installment loan over a credit card. For instance, if they had a whole bunch of credit cards at one time. Let's be honest, if you're an adult, it may happen. Yes. So you want to take those balances that you owe on those high interest credit cards and put them into an installment loan to where you have one payment.
Yes.
And then that actually will improve your credit score once those credit cards are reported to the credit bureaus as paid off.
Yes.
With credit cards, one may choose a credit card over an installment loan because you could earn points, rewards, or even cash back.
They can game it. They can play the game. Yes.
With each purchase. So some people like that more. And I mean, that's helpful.
Well, and credit cards can be a little safer if you're traveling or shopping online. There's sort of reimbursement policies for fraud and things like that are a little quicker. So there are instances where getting or having a credit card to use is beneficial, but really leaning on it as meetings financial needs month to month is dicey. That's not the situation you want to be in, right?
That's so true.
Now, how can responsibly managing a personal loan help set someone up for long-term financial success, such as qualifying for larger loans or mortgages? How does a person using what's available to them now benefit them in the future?
It could help successfully show that they can create a budget or a plan so they can plan for those expenses and prepare for a larger loan amount or a mortgage. Sometimes you may run into like vehicle repairs. So having showing the responsibility of your pay history and being able to pay the loans that you take out on time can set you up for success.
Absolutely. And then building that good credit score. I mean, I always, whenever I'm talking to a group or audience or going to a classroom, when it's appropriate, I always try to really remind people of what credit does for them. Because if you make those on-time payments and you do get into a bind and you need, one of the instances that I often use is like a pet emergency. Almost everybody has pets.
That's true.
Vets are not free, and they certainly are not cheap.
No, they're not.
And sometimes that emergency means that you have to lean on a credit card or get a credit product that you might not have access to yet. And so making sure you're in a good financial position to borrow, that somebody will say yes to you when you need a loan.
Yes.
You making small on-time payments with a $300 to $500 personal loan can really make the difference in the future for something so much more significant.
It shows your trustworthiness to that lender. And even it could help improve your credit score as well. And that's what you want. Mm-hmm. You want them to trust you. And a lot of people don't even consider your job time. Being on your job 12 months or longer helps you. It helps give you a better option to get approved.
Absolutely. So it's one of those classic, like the 3 C's of credit, like the old school way of teaching how credit works. And that's the character aspect. Like, what is your job and how long have you been there?
How long have you been there?
And especially if you have a relationship with your financial institution. I know on Amarillo College campus, when I do Badger Smart there and go talk to those classrooms, I'm talking to a lot of students who use things like Cash App and Venmo, which is really, it's fine. I don't know why you wouldn't use like what's within your education credit union or Happy State or A&B app. I don't know why you wouldn't use it. But if having that relationship with a financial institution, we know you've been at your job for a while. And yes, we know you might be struggling and your credit score might be iffy, but we also know you. And you having that relationship means the difference. It might make the difference between a yes or a no on a loan.
Absolutely.
And so, yeah, now, Janie, any other like final thoughts? Any other points like, oh, I should have mentioned this? What have you seen this week where you would like speak directly to your person? There we go.
Honestly, the ultimate thing is to make sure if you take a loan out, you pay it back, pay it on time. That is the biggest portion of your credit score. If you get a credit card, the rule of thumb is to stay within 30% of that limit that you've taken out. There's different practices with a credit card that can help you improve your credit score. Some want to use that card to pay their monthly utilities. You can do that. That will help improve your credit score as long as you make those payments. And then you may not even pay any interest if you pay that on time before
within the month.
Within the month. So there are some benefits. main thing is make your payments on time, because that shows your relationship with that lender and your trustworthiness to pay the loan back, and they're more apt to give you more money.
Well, and if they're worried about like, oh, I've got myself into some trouble, or, oh, I've done this and I've maxed out 3 cards, like, you're a certified financial coach.
Right.
We're both certified financial coaches. What can we do to help them?
Help them set up a plan and a budget.
Absolutely.
And just see, where can we cut back? Where's those expenses that the money is going out the door, but we could maybe save some in this area?
Or what resources can we have in the community where we can maybe like save you some money on some groceries, that we can take that money that we saved and like pay some of this
That's
down,
right.
that kind of
Limiting
stuff.
those times to go eat out that cost you $50 or more dollars.
Or door dashing. Like I said, I
DoorDash.
don't see a lot of
That's an
people.
extra
I don't see a lot of
expense.
people eating out, but I do see a lot of DoorDash cars in my neighborhood. And
DoorDash is very expensive when you look at it. It
yes.
is.
You break
you
it down.
Yeah, you get paid. You get charged those extra fees, and it's just
not worth it.
not worth it.
It's I've not received a drink ever anytime I've used DoorDash. So anyway,
Yeah, that's mind blowing to do DoorDash for a drink. Don't do that.
it's like, I got a burger and fries, but no soda. What's wrong?
That's true. That's true.
This is horrible. No, but thank you so much, Janie, for joining us and sharing your time and expertise with us today. Your insights have been so valuable. I always love talking to you. And
Yes.
Go see Janie at the Amarillo College, the Badger Smart branch. Whether you're an Amarillo College student or not, go see our lovely branch. Go see our lovely team there. I know our listeners so value you. From our VITA program earlier in the spring and everything else, I know the work you're doing there is just so phenomenal. And to our audience, thank you so much for tuning in. Remember, a new episode of The Core drops the first Friday of every month on YouTube, Spotify, Apple Podcasts, and Amazon Music. Be sure to subscribe so you never miss an episode. And with that, we'll see you next time on The Core.